This week, we're going to cover why we invest like women here at 10 Capital and why you should too. Well, if you find yourself in the middle of this video craving a rocket pop or an ice cream sandwich, it's probably because on some low level you're picking up the ice cream truck music that has been playing incessantly outside my window for the last 2 hours. Feel free to hit pause, go grab that popsicle. But this week we're going to cover why apparently we invest like women here at 10 Capital and why it would be a great idea for you as well. Turns out, I guess we've been investing like women and espousing such a thing here at 10 Capital for some time without knowing it, and that investing like a woman can lead to greater success. So where did all this come from? Caught an article by Paulette Filion and Judy Parati in an industry magazine a little while back, very brief article where they took a look at a piece written by the New York Times, a woman named Lindsay Krause, where she looked at how men and women view quitting differently and the decision making around that. And really the genesis for her article was this year's Boston Marathon, which for some of you may know had a ton of inclement weather, very cold conditions, sideways rain, and an interesting thing appeared, which was men quit 80% more than they did last year, where women's quit rate only rose 12%. And so this got Ms. Krause wondering, what's to this? Was this a one-time event? Men and women do view quitting, and there's some differently, and there's some things that women inherently do that decrease their chances of quitting compared to men. So what are those things? There were really three big theories, ideas that came out of her research, not only from talking to coaches and things that are more race specific, but even psychologists. And they were the following three things. One, men just tend to be more aggressive. So within this race context, they got off to quicker starts, only to have those inclement conditions then wear them down near the end of the race. The second big difference between the two was the level of teamwork that even amongst elite women runners was demonstrated as compared to their men counterparts. They were encouraging each other along the race, helping one another out. That type of teamwork just wasn't found amongst the men. The third and final point that came out, and perhaps the biggest one, was women's ability to reset goals and expectations. So whereas men viewed things more black and white, they wanted to either beat their best time or just quit and give up if that couldn't be achieved. Women were more focused, again, in this case, in finishing the race, achieving that ultimate goal, even if it meant having to moderate expectations. So does this apply within the investment world? Yeah, there are a lot of parallels, but I want to go beyond anecdotal evidence to hopefully find some statistics. And it turns out they're there. Fidelity, Reuters put out a great piece where they looked at this. They found women are better savers than men, saving almost 1% more within plans than their male counterparts. Two, they also return about 1% more in total return over time than men. Well, why is this? Well, it actually harkens back to the same three things that were demonstrated within that race. They tend to be less aggressive and take a more measured pace, where men get their ego involved, women and look for individual stocks and wins and attempting to market time. Women investors were far more apt to use mutual funds, ETFs, target date funds, et cetera, and have far less turnover within their investment portfolio than men that tended to performance chase, according to this Fidelity study. The second big piece that came out was that men viewed the whole financial, or women, excuse me, viewed the whole financial planning experience from a much more holistic level. So they wanted to define goals, expectations, and were more apt then to stick to that plan, again, than men that were much more focused on return. Here at 10 Capital, this has been something we've been talking about for quite some time, really understanding that, again, to use this race metaphor, that it is a marathon and not a sprint. Focusing on funds, diversification, again, not getting hung up on just picking whatever the winning asset class of the moment, whether that's gold or the S&P 500 or cash or whatever the case may be, Bitcoin, whatever the case may be. But again, rather building a plan, building a portfolio that's tied to a plan, and starting with what is that why? What is needing to be achieved? what gives us the best probability of achieving that success. And that's really where, again, we start here at 10 Capital, and how we would encourage any investor to start is, again, try to divorce that ego from the process and the emotions as best you can. It's a highly emotional thing. We've covered that before, but really put that time, that attention, that effort into knowing exactly what you're trying to achieve, and then giving it the time and the patience to do so. The second point, again, much like the women racers that were teaming with one another and partnering, it's something we do internally, not only with clients in terms of trying to build relationships through events, the type of planning process that we do, but building it and encouraging each other internally. It can be a very tough business. Markets can be difficult. And to being able to have that type of camaraderie, again, ultimately to deliver better advice and service to the clients in which we serve. So that team component, again, so critical to what we're about here, and turns out critical to success in just about anything. Finally, again, the ability to recalibrate. We have brought a whole new process in, as you know, try to take things to yet another level around planning, starting at what are the goals, what are the values, how do you think about money, and then having the same ability to monitor plans that we have with portfolios, so that at any point in time, when conditions, be they market, life, etc., get inclement like that weather during the Boston Marathon, we can be like the women runners in that race, recalibrate expectations, understand when decisions and changes need to be made, and when maybe we just need to moderate expectations for the moment, but stay put to, again, achieve that level of success over the long term. And that really is the point. We're going to leave it there. That, as counterintuitive as it can feel, the best way to ultimately achieve one's goals is to have that long-term plan, stick to it, and give it that patience. So with that, we'll sign off. We'll all learn to be a little bit more like our better halves, who have yet one more thing on us guys. But again, in all seriousness, embracing team, embracing that long-term focus, embracing that ability to adapt and change expectations to achieve success. So thank you for joining us this week. We'll see you again next Friday. Thanks.